What is going on, investors? Welcome to the M1 Finance Portfolio Update. A lot has been going on this previous week. I have not made any purchases this week. I am slowing down with my buys and only buying stocks like Alibaba, which I have built up a position this previous week, and I will be buying more. My purchase point is $167.90, and I will make this one of my biggest holdings in my portfolio. Based on the earnings, the price of the stock should be way higher than where it is right now. It should be in the 300s, above 300s actually. But it is trading at this price right now and it's available at a bargain. And these are the companies that I'm building up positions in. Everything else is super high, super euphoric, super extremely expensive right now, as I'm seeing. Also, some other companies like Alibaba are also like AbbVie are also available at cheap price. AbbVie did go down in price in the past week. I think it's down by 6% now for the week. And the reason is because their drug, I think it's Rizvac. Rizvac is 3% of their business, and now FDA made it mandatory for them to mention on Rizvac that it has heart failure risks if you consume that drug. So that's what's going on with AbbVie, and so I think it's a short-term fear. It's very short-term fear. They're not closing down the drug or anything. They just completed the FDA approval, and it's a good thing actually in the long term. So the stock is down right now by almost 6% for the week. So I'm also building up a position in AbbVie this week. Right now, it's available at a cheap price. So my entry point was $107. Currently, it's at $111. It was at $117 just this previous week. So that is what I'm building up a position on in my portfolio, Alibaba and AbbVie this week. And other than that, I am just storing up cash and I'm just getting ready for the next bear market or the next crash. This bull market has been going on for a while now. I think 10 years or even more. And before the COVID crash, and now after the COVID crash is still going up. So I think we might be due for a long bear market, maybe 5 years, 6 years, 10 years bear market. Who knows? Depends on when that happens. It can happen after the Fed tapers. It can happen after the interest rates goes up or what have you. But it's inevitable. Something is going to come, and that is what I'm getting ready for. Now, if it doesn't happen, and this bull market keeps raging on for, let's say, the next 20 years, next 10 years, which is impossible, but let's say. So I'm still safe, I'm still good because I hold parts of great businesses and I can always dollar cost average. If that happens, I will be buying JEPI, which is a JP Morgan dividend paying ETF, or I will be buying companies like Duke Energy Corporation, which is a safe, stable dividend paying company, or Capital One Financial, which is currently available at a P by E ratio of 6.78. Banks, they have always been good to me. Capital One Financial, my entry point was $90, and currently it's trading at $157. So my entry point was $90. So almost doubled my money, including the dividends. So that's almost double the money in just 8 months. So these are the type of positions that I'll be buying over the long term if this bull market keeps on going on. Capital One Financials, JEPI ETF, VYM ETF that I also hold, and Equinix, which is a data center REIT. I am also very bullish on data centers over the long term. 3M, which is industries in my industry SPY, or businesses like that that are safe, that are available, are still available at good prices, good P by E ratios, not crazy high prices if the bull market rages on. I will also be buying companies like Facebook. Facebook has 1.9 billion daily active users across 4 platforms. Now they have amazing power to increase the revenue from their business. Those are the types of positions that I'll be building if the bull market rages on. If the bear market comes in, I'll be buying everything in this portfolio. I will be a buyer for all the 25 companies. You can check all those 25 companies. I will leave a link in the description below. So far, the portfolio is up by 26% over the past 8 months. Now, I know that is a very short time frame to judge the performance of the portfolio, but this portfolio time frame can be judged in 10 years, 15 years, how I perform, how my portfolio performs over the course of 10 years. and that is what I'm judging my performance by. On the topic of crash, even if the market crashes or goes down by a lot, I still hold parts of great businesses. When I'm buying a stock, I'm not buying just a market tool or something like a lottery ticket or something. I'm buying parts of a great business. And I will hold parts of that great business no matter if the market goes down or it goes up. As long as the revenues of my business are growing, I will be fine. Short term investors, they enjoy bull markets. Bull markets is when they will be euphoric, they'll be happy, everybody will be jumping up and down. I enjoy bull markets too. I like seeing green in my portfolio. I'm not going to lie. But long term investors, value investors, they wait for fear in the street. They wait when for the bear markets. They wait for the crashes. And that is when they build up their positions. And then they just wait. They just enjoy the bull markets. They just sit calm, enjoy it, do whatever, make YouTube videos, whatever, right? But they wait for the bad times to hit, the fear to strike the streets. And that is when they build up their positions. And that is what I'm waiting for. Alibaba, for example, Alibaba people were scared, and that is when I'm building my positions in Alibaba. Because when there is fear on the street and it's a good business, people are selling it away. All these short term fears, they'll subside in the long term. Believe me, all these short term things, they will subside in the long term. And good business will survive and good business will win. Some of my biggest holdings in this portfolio are Apple, Facebook, JP Morgan Chase, JEPI ETF, Etsy, Equinix, which is a data center REIT. I'm very bullish on data centers. Disney, PayPal. PayPal is one of my favorite businesses. It has a huge moat in the fintech space, and I think the fintech space is just started. It's just getting warmed up. In the long term, PayPal has immense potential. I think the banks will not be present in the next 20, 30 years. They might not be, I'm not sure now, but they might not be present in the next 20, 30 years. And companies like PayPal can be the winners of the next century. Now they're coming up with a stock market tool where you can buy stocks on PayPal app. So that is also fabulous. One of my favorite businesses, PayPal to hold. These are the type of businesses that I'm building up positions in. Tesla is also a great business. I bought it at expensive price, but I'm looking at 15, 20 years ahead, so I'm not really worried. Also, businesses like Shopify that are empowering entrepreneurs, now expensive. P/E ratio is high, but again, the time frame is so long and the business is so great. Nobody can compete with them. Amazon cannot beat Shopify in their game. They have just a niche of their own, and that is their moat. And that is what I'm buying, the moat. Again, Target again has a customer of its own. That is its moat. My biggest winners in this portfolio are Capital One Financials, which is almost double from when I bought it, followed by Target, which is 32%, Shopify, which is up by almost 39% from when I bought it. Again, a huge increase. While people were saying, oh, Shopify is so expensive, it's not going to go any higher, it's not going to go any higher. And that is when I was building my positions in Shopify, and it has done good for me. Because it's a great business, man. It's a great business model that's hard to beat. Followed by Google, which is up by almost 36%. Google is also a fabulous, amazing business. If you bought Google at a great price before like 3, 4 years, I mean, amazing, man. Smart job, good job for you if you did that. Someone who's watching and he did that, they bought, or he or she did that, they bought Google at a cheap price before like uh, 4 or 5 years. Good job, man. You guys did a great job. If not, it's still a great time to buy Google. It's never a bad time to buy a business like that. But when it crashes, when the market goes down, that will be even a better time to buy. Some of these positions I built right after, a little after the coronavirus crash, around the times of November. And before that, I sold a lot of positions. If you guys have been following my channel, I used to hold completely different. It was a completely different portfolio. I used to hold a lot of different positions, like Sandy Spring Bank, like Boston Properties, all those different holdings. I sold out of them. Sandy Spring Bank, I bought at $22 during the crash, and I sold it at 45. So I almost doubled my money plus the dividends within a span of 3, 4 months. Followed by other holdings that I used to hold. I built up my positions during the COVID crash and I sold them right in November, before November, and then I poured that money into these holdings, which are my long-term holds. So if you are watching, if you have been here this long and you're watching me right now, you're listening to me right now, listen to me. Be patient. Be patient. Time is your friend. Be patient. There is euphoria. There is people jumping up and down. Everybody's talking about stocks. Tides will turn. Times will change. It's never the same thing. This bull market will end. Be patient. Be ready. Know your risks. Buy good business and be ready when the tides turn. Be ready to build up your positions and let those positions perform for you over the long term. And no, don't just jump in when the market drops. Build up your positions slowly, slow by slow, slow by slow when it's in a bear market, and keep building those positions up. And when the bull market hits, you will be a great winner. You will be a great winner. And think long term. Buy parts of great businesses. Let this euphoria run. Don't run with the euphoria. Think opposite the stack. Think opposite the sheeps that are jumping up and down because the market is doing good. Think opposite those people and think long term. Buy good businesses and wait till the tides turn. When the tides turn, that will be the time to go for the kill, to go for the juggler. And that is my lesson to you, or my whatever you want to take it. I came to this country 4 years ago with $400, and now I have built up this portfolio from scratch, and I'm waiting right now. I'm just waiting. So that was my update on my portfolio. Also, some quick tips on what you can do when the market crashes. Just make sure you're ready when fear strikes. This is Jason, aka the Frugal Investor. Thanks for watching, and see you in the next one.